Hey, it's Ken Finnan from Capital Advantage Tutoring, and it's my job to get you past the SIE. FINRA came up with this test about 3 years ago. It is a basic skills test, not easy, but it's not as hard as the 7 or the 66, or the 63, which you guys are going into probably next. It's the precursor. It's not a prerequisite. You can actually take it with other exams. I have a lot of students that will take the 7 first, or even the 66 first, and then take the SIE. Totally fine. It's worthless without it. So it's more of a co-requisite than a prerequisite. The SIE, everyone can take. Anyone who's 18 or over, whether you're sponsored by a firm or working or not, while you're in college, feel free to take it. So my job is to get you through that. So I have a lot of students I do, but here I'm giving back and I'm trying to offer free services so that you don't have to spend hundreds and thousands of dollars to get past this thing. So I have a playlist called the SIE, the book, where I am going through each chapter of the book to explain it and put it in English. If you like that stuff, go into my links and you can get the Achievable, which is awesome. It's an awesome SIE resource. It's under under $80. It's just, and the whole thing gets you totally ready for the SIE. Another one is STC, Securities Training Corp, which is what I'm working with a lot. And I have a link for that down there. You get a nice 15% discount. I get a little money for that. We're all happy, right? It makes everyone happy. You get a discount, I get a couple bucks, and you get a solid program. So either Achievable or STC are all great. For the SIE, they're both great. There are other vendors out there, Kaplan, Pest Perfect, and training consultants. I would stick with those main ones. I would try to stay away from AD Banker, Exam FX. I mean, if that's what you have and you want to supplement, totally cool. But I would really try to build up and get better resources. So what today I'm going to do is I'm going to take a test with you. So the way you're going to handle that is you're going to see the question, hit pause right away. Try to answer it yourself, maybe even score yourself, have a little fun, and then hit play and hear how I work my way through it. See if you can learn a little things. I'm not going to sit there and teach you anything, but it is absolutely showing you how to answer these questions, and you'll learn something. I think that's going to work. Let's go. And here we go. We're starting off with number 1. A customer requests that a broker-dealer sell stock that she owns and at the same time use the proceeds of the sale to purchase a different stock. For this transaction, okay, so we're selling shares we own and buying and using those proceeds to buy another stock. That's called a proceed transaction. So by the way, guys, the best way to do this is to kind of jack me down to 75% because I talk too fast. That would work. I like to do what I'm doing, so I talk fast, I get excited. So just jack it down to 75% the speed, and you guys will be much better off. Okay. The broker-dealer is prohibited from charging a markup under these circumstances. Nope. The broker-dealer is only permitted to charge a markup on the sale. We'll come back to that. The broker-dealer is required to charge a markup on each transaction separately. The broker-dealer is permitted to charge a markup on both transactions, but is required to compute the markup based on the amount of the money involved in the sale of the customer. I'm going to go with that. Let's go with that one because the whole proceed transaction is they don't want you charging separate ones. It has to be based on everything we're doing. So let's hit next. Let's see how we do. Why can't I hit next? What am I doing here? Oh, there it is. Boom. That's one right. Let's see if we can get them all right. You know, I'm going to get one wrong once in a while. It just happens. Who has the responsibility to investigate the accuracy of the information in a prospectus for a DPP? Okay. So this is a great question. I'm going to have to struggle with this. So let's see. Who's responsible to investigate the accuracy? Okay, so I go with this. The IRS throw that out. They don't do shit except for take my money. The SEC and FINRA, I don't know that they actually investigate anything. They just file. They take the file. Well, actually, SEC takes the filing. FINRA doesn't do anything with that. So I'm going to say the managing underwriter, the one bringing it to the public, should be to make sure all this stuff is good. So let's see if I'm right. Oh, that's number 2. I love it. Okay. Which of the following employees of a broker-dealer is not required? Guys, pay attention to the nots, okay? Which of the following employees of a broker-dealer is not required to be fingerprinted? A back office employee who handles funds. Oh, they touched the money. I got it. A registered rep who processes trades. I would say, he processes trades. I would say I'd go with that, yes. A senior officer of the firm who only provides capital is like a silent partner. We'll come back to that. A clerk who has access to records of original entry. That's its blotter, general ledger. So let's go. A, yeah, he touches the money. 2, he's a registered rep. We need the fingerprints. C, maybe. D, a clerk who has access to records of original entry. That's like the blotter, general ledger. That's actual stuff. Let's go with C because I think they don't need to be fingerprinted. because they're just dropping the cash. Oh, okay, here we go. Which of the following statements is not a characteristic of a 529 plan? What's 529? That's for the education, right? So education to 529 covered all both for education. The money goes in after taxes. Let's see what happens. There are no income limits based on contributors. We'll come back to that. Contributions are unlimited. No. Earnings in the account are tax deferred. That's true. And withdrawals from 529 plan used for educational purposes, because you guys know I can't speak, are not subject to federal taxation. So that's a true statement. C is true. A is true because there's no income limits. So I'm going to go with B, contributions are unlimited. While they're very high, each state has their own. Like I think New York's is like 350, not testable, but I would go with they're not unlimited. They're really high. Now a covered L does have an income limit, and they do have contribution limits of $2,000 a year. Oh, there we go. 4 in a row. I'm happy. I'm on a roll. Which statement best summarizes the difference between a primary and a secondary distribution? A primary distribution can only be made if the issuance exceeds a specific dollar amount, while a secondary distribution can be made for issues of any size. Nah, that makes no sense. A primary distribution involves the sale of new shares by the issuer, while a secondary distribution involves the sale of shares already issued and outstanding. Maybe. A primary distribution can only be made for equity issues, while secondary is only for debt. Nope. A primary issue must be made at the current market price, while a secondary distribution must be made at a fixed public offering price. Nope. So it's going to be B as in boy. A primary is when the company receives the money. A primary offering, whether it's an IPO first time or anything after that, a follow-on or additional offering, those are primaries where the issuer is actually selling more shares. A secondary is when like an owner who already has shares, like Bill Gates or Jeff Bezos already owns the shares already, and they're going to sell their shares in an offering. That's a secondary. After this, you can do whatever you want. Once you pass the test, people conflate secondary and follow-ons all the time, but let's not do it for the test. Until you pass all your exams, primary means the issuer is getting the money. Secondary means a shareholder is getting the money, or the issuer is not getting the money. So let's go with B. Let's see if I don't screw that up. I love it. Okay. Historically, a decline in the real, I always screw these up. So let's go with this. Historically, a decline in the real GDP for 2 consecutive quarters is an indication that the economy is in the hands of the Democrats. No, I'm just kidding. I'm totally kidding around. It is it a recession, a recovery, a depression, or expansion? So it's not expansion because it's going down. Guys, I was kidding. So expansion is the other way. Depression is long. That's like 18 months, okay? A recovery is on your way up. So let's say it's a recession. So the market going down, that's contracting. The GDP going down is contracting. If it happens for 2 consecutive quarters, it is el recession. I love it. Okay. What is the basic balance sheet question? Here's the equation. This is my problem. I am horrible at balance sheets. It's what it is. I know that. I own it. I love it. I don't love it, but I just own it. So I don't worry about it too much. Again, it's not going to kill me. But let's see if we can figure this out. Total assets plus total liabilities equals equity. Total liabilities equals total assets plus what? Equity. Total assets equals total liabilities minus equity. Total assets equals total liabilities plus stockholders' equity. I am going to go with, because I don't think you're going to add the assets and liabilities. It could be, but I'm going to go with D, because I always think total assets is assets minus liabilities is equals equity. So I think if liabilities plus equity equals assets. Let's see if we're right. Oh, got it. There we go. Which of the following statements is true concerning an account statement? Okay, account statements, customer account statements. Guys, remember, slow my ass down. I can't stop. I'm on a roll. I'm like a train wreck. The statement must be delivered at or prior to the settlement of a transaction. No, because statements are monthly. The statement must include a disclosure that clients should promptly notify the broker-dealer if they discover discrepancy. I like that. Customers who provide discretionary account authority to a broker-dealer do not receive an account statement. That makes 0 sense. And a statement shows all activity in the account for a year. Well, no, that would, technically you can have one of those, but let's say they're quarterly, so that doesn't work. So we're going to say that you have to have a disclosure that says, you listen, if there's something wrong, you got us know, let us know promptly. They love the word promptly on FINRA. A corporation may choose to pay its shareholders with cash dividends or stock dividends. They can do product too. Nobody does, but they can. Which of the following statements concerning the tax status of these events is most accurate? So cash we're always taxed on, stock dividends are not, but let's come back. Well, only the stock dividend is taxable when received. Okay, throw that shit out. While only the cash dividend is taxable, maybe. The receipt of stock dividends will require the investor to adjust her cost basis per share. That could be true. C, neither is taxable. No, both are taxable. No. So we're going to go with B because cash dividends are taxable, stock dividends are not, but your cost basis is going to move around. Oh, I like it. Okay. A convertible bond has a conversion price of 50 and is currently selling in the market at 1100. The conversion ratio is, bring out the handy dating calculator because the first step to get ratio is par divided by the conversion price. So let's do that. Par is, it's a bond, so it's 1,000. If this was a preferred, to be 100. So 1,000 divided by 50, the little calculator would be 20. So that means I'll get 20 shares for every bond I convert. Just to take it one step further, if you're going to do this, and I'll put it with the I'll put my convertible bond video up here if I can. Well, I don't even have time. It is, but I'll try to do that while my non-soda drinking ass burps. $20 is 20 shares. Now, if I were to try to figure out whether I convert or not with all those questions, which I don't think they'll do here, you would multiply that number times the common stock price. So again, once you get the ratio, that's how many shares you get if you convert. So then you would multiply that times the market price of the stock to get the parity price. And if they want a stock parity price, you would do the market price of the bond divided by the 20. That'll be another lesson with 20. So let's go with that. So if I'm right, drum roll. Yes, good. Okay. Which of the following bonds has an interest payment which remains unchanged until maturity? Okay. Which of the following bonds has an interest payment which remains unchanged until maturity? Don't know what that means, but let's figure it out. An adjustable rate bond, no, they adjust. A variable rate bond, they adjust. A floating rate bond, they adjust. A zero coupon, I have to think because here's the thing, zero coupon doesn't even pay anything. I could be way wrong on this. I may be doing it too fast, but I think that all these mean that the payments change. So I'm going to go with zero coupon because you're not getting anything. Oh, I love it. And here's why. Basically, zero coupons, you're getting the money at the end, so it doesn't change. If it's at a regular term bond, I could have picked that, but zero is the best of the four answers because adjustable rate bonds, variable rate bonds, and floating rates all move. The coupon moves depending on current rates, which means they also have no interest rate risk. Oh, bonus. A company based in Europe with offices located in Jersey, we like to have its stock traded. Now, it's funny, when I do that stupid accent, my wife goes, I don't sound any different. So a company based in Europe with offices located in Jersey would like to have its stock traded on the New York Stock Exchange, just like I would. This would most likely be accomplished through the issuance of, okay, bankers acceptance, no, because that's for help foreign trade, like import export. Yankee bonds are foreign bonds issued here, no. Eurodollar bonds, that's companies here issuing bonds in another country paid in dollars. ADRs, there it is. ADRs are foreign securities trading in the US. The foreign securities aren't, but what they do is a foreign security gets packaged into a package, gets bundled into a package, and then the package trades on the stock exchange as an ADR. I think I have a video on those in my equity stuff, but we'll go there. So ADRs would be foreign companies trading here. I'm getting cocky, so I know I'm going to get one stupid and wrong soon. But that's okay. We're allowed to get stuff wrong. Which of the following statements best describes a banker's acceptance? Didn't I just talk about this? It is issued by non-domestic banks and secured by Eurodollars. That really doesn't make sense. It helps finance foreign trade between importers and exporters. I got it. We got to read the rest to make sure. It facilitates the trading of foreign stocks in the US. No, that's an ADR. It is used by a municipal issuer in raising funds to meet a seasonal need for cash. That's muni notes, TANs, and RANs. So let's go with A. No, let's go with B. I'm kidding around. Okay. Awesome. A spider. My daughter went to school, Richmond, the spiders. Okay. Is considered a type of, is it a mutual fund? Is it an index option? Is it a world currency? Or is it an ETF? I'm going to go with an ETF. It's a S&P depository receipt. That's what SPDR stands for. It should be an ETF. Now watch, it could be a mutual fund and I'll be screwed up. It is basically a packaged product, okay? That is the S&P, SP stands for S&P, okay? Boom. Usually the S&P 500, good. Which of the following best defined as a provision, big words, which provides a sales charge discount So which of the following is best defined as a provision which provides a sales charge discount, breakpoint, for making mutual fund share purchases without initially depositing the entire amount required? So okay, let's do this. So there's a couple of things. Dollar cost averaging, throw that out. That's the best way to invest in a mutual fund, because you're investing the same amount of money every time period, and you'll buy at different prices, which gives you a lower cost per share, which takes out timing risk. Rights of accumulation, that's just really that if you put money in and it grows, the fund grows, and I think I have it in my How to Pass the Series 6 video. If it grows and it crosses a breakpoint, any new money gets a breakpoint, but that's not what we're saying here. Dividend reinvestment just means that any dividend you get, which is taxable, remember that, you can reinvest without a sales charge. So that's not the answer. Letter of intent, that goes, look, I'm going to put money in now, but I think I'm going to put more money in over the next 13 months. And let's use that money that I intend to put in as my marker for breakpoint. So if breakpoints are every 25 grand, every 25, 50, and 75. If I put in 5 and say, look, I'm going to put another 50 grand in, can you give me the breakpoint based on the 50,000? And that's what a letter of intent is. Is it binding? No, it is not binding, but the max length is 13 months and you can backdate it 90 days. But I'm worried I'm going to get one wrong. I'll be really embarrassed. If an equity option is exercised, and remember, when does a stock transaction settle? If an equity option is exercised, now that's not the same as trading it. So with an option, you can do 3 things. You have to own it. You can let it expire, you can trade it, or you can exercise it. Exercise is actually doing it. Like if you buy a call, it's actually buying the stock. If you buy a put, it's actually selling the stock. That's exercising versus letting it expire. So equity options trade T+1, but when you exercise them, since you're buying or selling stock, it's T+2. I love it. Okay. The 5% markup policy applies to, let's go with this. Okay. Purchase of mutual funds? No, we know the sales charge is 8.5% out. Muni bond trade? No, because munis are exempt. So they have what they call reasonable. Okay. Fair and reasonable, which is just a FU, because then you don't know the actual rule. It's 3%. That's where you're not going to be in trouble, but they're not that. Okay. Also, the phone's ringing. That's great. Nobody on Easter. Who the hell is calling me on Easter? So a new issue of common stock? No, because they have their own rules. It's like 10%. So I'm going to say a proceeds transaction. That's earlier. Remember that question where you're selling a stock to use that money to buy a new one. Okay. Who would be calling me on Easter? Yes, I'm doing this on Easter. I'm a loser. My family, my wife's in Connecticut. My other daughter's in Panama volunteering. My other daughter's in Pennsylvania with my grandson. And my 20-year-old wants nothing to do with me. He's doing probably playing Call of Duty all day long. Okay. Member firms must maintain records of all gifts that exceed. I think this is a trick question, because we all know that 100 is the gift limit, but you have to maintain a record of all gifts. I would think. Boom. Any gift that comes in, you have to keep a record of. 19, we're strolling along. Number 19, an investor who purchases stock in a closely held corporation with a small number of outstanding shares should be most concerned. So I'm in a closely held corporation, which means there's not a lot of owners, with a small number of outstanding shares, should be most concerned about which type of risks. I would say, well, interest rate risk is a bond risk. No. Reinvestment risk is a bond or preferred risk. No. Regulatory risk, it could be, because that's like for a biotech or something waiting for approval from the US. I'll say liquidity, because if not a lot of people own it, it's going to be hard to fucking sell. A SARS, a suspicious activity report, should be filed. Sorry, guys. My mouth works a lot and I need to drink. I should fill it with scotch. A suspicious activity report should be filed only for transactions for parties in the OFAC list. OFAC is the list of people who are bad guys. Only for transactions for more than 10,000. That is a CTR, which is not a big deal. Only in the event that a firm has actual knowledge the client is laundering money. No, because if you'll never really know till you investigate. For most types of suspicious activity demanding, wow, I can't read. For most types of suspicious activity, depending on the facts and circumstances. So any kind of suspicious activity, and really the guideline is anything over $5 grand. you report, and you have 30 days to report it. But remember, that's a big deal. You can't tell the client you're doing it ever. You have to keep a very tight list of who does know about it. Good. Which of the following situations is an example of reinvestment risk? A bond issuer is having financial difficulties and unable to make interest and principal payments. That sounds a lot like default. An individual purchased a security that's ultimately yielded significantly less than another that he could have chosen. That sounds he chose the wrong thing. Sounds a lot like opportunity risk. The payments on a mortgage-backed security are ending early due to the homeowners refinancing the mortgages as interest rates fall. That sounds a lot like prepayment risk. After interest rates decrease, the issuers call their bonds back and issue new bonds with lower interest rates. For bond investors to realize the same return on new bonds, they are forced to purchase lower quality bonds. Now, I don't like that answer. That's the best of the four, and that's going to be the answer. But when I think that's more call risk than reinvestment risk. I think of reinvestment risk as a bond that pays you every 6 months and rates are lower, and you're going to take that money and reinvest it and get a lower rate. But this is the best one, but it has to be the best one because it works. Because you're taking your money, you got it back, and it's reinvested. I think this is more call risk than anything else, but we'll go with it. I love it. A municipal finance professional, MFP, and her spouse make a political contribution of $400 from joint account. Uh-oh, 250 is the number. Oh, but he's married, so okay, right? Okay. Only the MFP signs a check. Oh, first mistake. According to the MSRB political contribution rules, the contribution would be viewed as a $400 contribution from the MFP. Because if you have a joint account, if only one person signs it, it's considered from that person, even if it's a joint account. To have it be considered from both, it has to be signed by both people. Boom. So we're going to have a problem because what's the max? 250 per election. We're not. And what happens if you violate? You and your company cannot do negotiated offerings with that issuer for 2 years. Good. Which of the following is not a pass-through entity? Okay. S corporation, pass-through means it's a corporation that passes through its gains and losses. So an S-Corp does pass through. An LLC passes through. A REIT, it passes through 90% of its income. So I'm going to go yes. And a C Corp does not. So a C Corp, when they get money, they pay taxes on it, and then they pay dividends, and then you pay taxes. So that's double taxed. That is not a pass-through. Real estates, they pass through 90%, so they're not taxed on everything. LLCs and S-Corp, every dime passes through to the investors. And then what happens is they get only the investors pay taxes. The corporations don't. So I'm going to go with the C corporation. Boom. Which of the following is not a benefit of investing in a real estate investment trust, a REIT? So diversification, absolutely. So if I buy one building, I have risk that the neighborhood goes to shit and nobody wants to rent anything. So that's a risk. So if I buy a REIT, I'm owning 100 different properties in this package of goods. So that's diversification. I agree. Liquidity, I like that. Liquidity, because since a lot of them trade on an exchange, they are liquid. Stable dividend income, yes, sort of. Not 100% there, but it's pretty stable because you're getting, they have rents and stuff, and they're pretty consistent in what they're doing. And I'm going to say passive losses. So that's not the thing. So REITs do not pass through losses. They only pass through gains in the form of dividend. They're not considered passive. So let's see if I fuck that one up. Boom. So remember, so why do I buy a REIT? For diversification, for liquidity, and for income. I like it. Now, there's two types of REITs. There's an equity REIT where they're kind of flipping houses, and then there's a mortgage REIT where they provide mortgage financing for houses. Both of them pay kind of consistent income. A cash trade would settle. I like it. So don't confuse cash account with cash trade. Cash account is an account with no margin. You're not borrowing money, so it's just a regular account. A cash trade means that you're settling same day, 2:30 to be exact. You're settling at 2:30 on that day. But God, Ken, what happens if you do a trade at 2:15 or 2:30? Then how can you settle at 2:30? Well, then it's 30 minutes after you do the trade. Boom, I got answers. Okay. The third market, called CQS, Consolidated Quote System, is concerned with, what do they do? So what does the third market do? So let's talk about them for a second. So we have primary market, which is new issues. Throw that out. Inside the secondary market, we have four markets: first, second, third, fourth. First market is exchanges, New York Stock Exchange, NASDAQ. Second market is over-the-counter, bulletin board, pink sheets. I like it. That's where bonds trade. Third market is where listed securities trade over the counter. And fourth market is ECNs, like institution. So institutions who are not members of the FINRA can do trade. So let's go with it. Listed securities trading on exchange, no, because that would be the first market. B, securities listed on exchange that are traded directly between institutional investors. That's more like the fourth market. D, over-the-counter equities trading on exchange. That's not really a thing. And securities listed on exchange but traded over the counter. So that's the third market. Third market is where securities listed on the exchange trade over the counter. Okay, good. All of the following statements are true concerning the underwriting of a new issue, except, always look for the except. Now, what I do is I have a piece of paper, I write the word except on top. So whenever I see an except, I take my hand off the mouse and I put it right on that word. So it reminds me when I go to answer it, it triggers that, oh, it's an except. Members of the underwriting syndicate whose customers sell securities back to the manager of the syndicate during the underwriting may be penalized. That's true. That's called the penalty bid. When you are part of the syndicate, you're supposed to sell it to long-term investors or investors, not people going to sell it right away. So if you're a member of the syndicate and you sell shares to an investor and they try to sell it on the first day you can trade, the lead underwriter can penalize you if it's hurting them. The preliminary prospectus, that's A, is out. A is the true statement, so it's out. The preliminary prospectus, called the red herring, will contain all the relevant information, including the final price of the issue, in order to obtain indications of interest. We're going to come back to that. Some underwriting agreements include a clause that relieves the underwriter of his obligation if certain circumstances are not met. That's called a market out clause. If something goes crazy, but during the underwriting process, like a pandemic, you can get out of your obligation. D, the underwriting syndicate may engage in stabilization. Yes, stabilization is when the lead underwriter buys the stocks at the shares at the IPO price or so for a few days, just to keep the stock at a good price. It's the only form of legal manipulation. Boom. So the answer is obviously B. The preliminary prospectus does not have final price or final date. It can't, because it has not been declared effective yet. If I'm wrong, I'll be upset. Okay. The minimum denomination for negotiable certificates of deposit is, I always forget these little numbers. So negotiable CD, I think, would be a quick hondo. Good. What do they call it? 10 stacks? I don't know. Okay. When an option contract is exercised, the writer, so the buyer of the option exercises, the writer of an option gets assigned. So what can do? Let's start at the bottom. We'll establish a capital loss. Well, we don't actually know that because you could still make money. May close out the position on receipt. No, because once you've been assigned, you've been assigned. May retransmit the assignment notice. You can't give it off. So obviously, if you're the buyer, buyers have rights, sellers have obligations. Buyer of a call exercises, he gets the buy. That means the writer of a call must sell it to him at the strike. The buyer of a put has the right to sell. That means the seller or the writer of the put has to buy it from them. Okay, so it has to be A. There's no except, double check, good. When an investor compares her portfolio's performance to an average or index, the average or index is considered A. Total return, no, that's just your gains plus any income. Return of capital, no, that's getting your money back. An unrealized gain, an unrealized gain is when you buy something and it rises, but you haven't pulled the trigger and sold it yet. Not taxable. It's not taxable till it's realized. So I'm going to say you're setting a benchmark. You're trying to beat the benchmark. Boom. Broker dealers are required to send balance sheets to customers I always hate these questions because I forget. Well, it's not every 3 months. It's not every 9 months. So I'm going to go as semi-annual. I could be way wrong on this, but I do think they send balance sheets to customers every 6 months. But easily, guys, you can make fun of me if I'm wrong. Okay, there we go. An employee of an exchange-traded company is allowed to buy or sell securities based on information without committing an insider trading violation in which of the following situations. So I work for a company, a publicly traded company, that can buy or sell securities based on information without committing insider trading. Okay. This will be the second. Okay. A colleague of the employee who works in the corporate headquarters tells the employee about a conversation you overheard about a possible merger. No fucking way. The employee's spouse works for a government agency and discloses to the employee that the company will be awarded a major government contract in the future. No, that just only senators and congressmen can trade on that shit. So that's no. The general counsel of the company informs the employee about a legal decision regarding an ongoing class action lawsuit against a company. I think that's not public yet. That could be a big deal, although technically public. An outside research analyst not affected with the company and the employee discuss why the company's earnings could be dramatically lower than prior estimates, which means they're not in possession of inside information. I'm going to go with D. Boom. The purchase price of a no-load fund is determined by the supply and demand. No, that would be a close-end. Net asset value plus the sales charge. And why the hell would you call it a no-load if it has a sales charge? Net asset value plus commission. No, because there's no commission with open ends because it's a sales charge. So it'd have to be NAV, net asset value. I mean, there's no load. One thing you need to know about no loads is they can have a 12B1 fee, but it can't be more than what? 0.25%, or in lingo, 25 basis points. Good. The fund that would have probably the least price volatility is a N, long-term muni bond fund, a growth fund, a short-term corporate bond fund, an international equity fund. So I remember with bonds, so growth funds definitely going to move. International equity fund definitely going to move. So it's either long-term muni bond or short-term corporate. So remember, long and low. Long-term bonds move more, and then low coupons move more. So long and low. So long-term would move more than short-term. So I'm going to go with C because you're looking for the least amount of volatility. Here we go. When interest rates are falling, the market value of existing bonds, well, they go the other way, right? Interest rates are dropping. Now all the older bonds look better. So the prices go up because they're more attractive. Because remember, the coupon doesn't change unless it's a variable. So you buy a 5% bond, rates go to 4, your bond looks good because it's still paying 5. People want to pay more, so the price goes up. It is going to increase. I love it. During periods of deflation, the Federal Reserve Board, FRB, will likely, so what are they doing? During deflation, that's a crappy economy. We're kind of going down. So they're going to try to juice the economy a little bit. So what do they do to juice? Well, what they're going to do is they're going to buy treasuries and lower rates. So let's see what happens. Issue new securities. Well, the FRB doesn't issue. They buy and sell. Encourage a rise in interest rates. Why the hell would they make it harder to borrow? Sell securities in the market? No, because that would take money out of the economy. So yes, during a contraction or a deflation, they will buy treasuries and they will lower rates. So C is the answer. The payment date for securities purchased in a cash or margin account, as stated by Reg T, is the payment date for securities purchased in a cash or margin account, as stated by Reg T, is. That's a tricky one because they get you because it's T plus 4, but it's S plus 2. So it has to be, everyone gets settlement date is T plus 2. So you buy it on Monday, it settles on Wednesday. We actually have until Friday to pay for it. So the company, the broker dealer settles up, but you have 4 days. Good luck finding a broker dealer that will let you do that, but that's the rule. So this is the tricky one. I was looking for 4. I didn't find it. I started panicking because I'm on recorded. I'm going to say 2 business days from the settlement date. Since settlement is 2 days from that is 4. That has to be the best answer. Boom. Interest on a TIPS, Treasury Inflation Protection Security, is, so it's a regular Treasury. So remember, so always remember they tax themselves, right? They don't tax the other ones. So any Treasury is taxed by the Fed, not by the state. So let's find that. Subject to federal and state? No. Subject to federal, but exempt from state? I like that one. Subject to state? No, because they don't tax each other. And exempt from federal and state? That's a no. So I'm going to say it's subject to federal, but not state, because anything issued by the Treasury pays federal, not state. Anything issued by the muni pays state, not federal, but they might not have to pay state. Good. An investor buys T-bonds on Friday, January 16th for cash settlement. Remember, look for that cash trade. Cash settlement is not the same as cash account. So this is cash settlement. That means it's settled the same fucking day. So buys T-bonds for cash settlement. Watch, I'm gonna miss something on this, but I can't be anything other than that. The Federal Reserve Board's open market committee, they're the ones who buy and sell treasuries, buys and sells which of the following securities, I just did that, most often to accomplish its aims. Do they buy bonds, notes, agency bonds, or bills? I have to think they trade the bills. I don't know the answer to this. I'm going to guess, but I would go with the bills because they're the most liquid and they're the most like cash for banks. Banks treat them almost as super liquid. Boom. A person who invests in a fixed annuity is most concerned with the performance of the insurance companies. Okay. Interesting. A person who invests in a fixed annuity is most concerned with the performance of the insurance companies. So let's talk about this. Is it the stock value? No. Is it credit rating? Maybe we'll come back to that. Separate account? No, because that's a variable. Oh, we care. So now here's the thing. We don't actually care about the performance of the general account because it's set, but that's the best answer. It's got it. It's either C or D. I'm going to go with C. I hate to get this one wrong, but remember, fixed annuity, fixed insurance is a general account. Variable, or you would see the word sub account, means it's in a separate account. So I'm going to go general. Boom, that's a nice green check. I like the green checks. An index option has been exercised. We're almost halfway, guys. We almost got this. An index option has been exercised. What is a writer of the option required to do to satisfy his obligation? So first of all, index options is no security, so you don't buy or sell stock. You're going to deliver cash or get cash. If you buy an index option and you exercise, you're going to get cash. If you sell an index option, you're going to deliver cash. So it's not what the strike price is. So A is out. Buy all the shares in the index? No. C, deliver all shares in the index? No. So you're going to deposit cash equal to the difference in the strike price and the value of the index. So you're going to deposit you're going to pay the in the money amount. So if you buy a 250, if I buy a 250 call and you sold it to me and the index closes at 255, you're going to give me $500. The difference between 255, let's say let me do it again because I might have screwed that up. You buy a 250 call. I think I did it right. You buy a 250 call. The index closes at 255. When you exercise, since it's $5 in the money, 5 times 100, you're going to give me $500. So the buyer of the index gets the money. The seller of the index gives the money, but they don't give the strike price. They give the in the money amount. I'm getting cocky. I know I'm going to screw up here. A registered rep is planning to take a client to a sporting event where the tickets cost 85 each. Okay, we're good. It's under 100. On the day of the event, the RR is not able to attend and ask for advice. Which of the following choices is best for the principal to recommend? Now, I've seen questions where they say, oh, don't worry about it. Just let him go because it's a mistake. No fucking way. FINRA they don't want anyone going because if you give, so here's the thing. How many tickets are we? So we have under 100. So we're good. The tickets are cost 85. The register rep can attend. I'm going to say, ask another register rep from your firm to attend the event. That's what I'm going to do. They can't pay for it. If they take a friend or relative, all of a sudden now it's $160, which is too much. Ask a client to return the ticket. That you can do, but good luck ever getting an order again in your life. Boom. So if you remember, the gift limit is $100. If you give 2 tickets for 85 each, you were supposed to go. You can't go. Get another register up to go with him, and then it's entertainment, and there's no limit. If you don't, then now you've given him 1 ticket and what's $160, $170 worth of tickets, which is a problem. Premature withdrawals, I'm not going to touch that one, of earnings from an IRA that qualify for an exception are subject to. Okay, read that again because I got distracted. Premature withdrawals of earnings from an IRA that qualify for an exception are subject to. Well, if it's qualified for an exception, there's no penalty. So throw the penalty out. So A and D are out. You will pay taxes on a regular IRA. So we're going to go with B because when you take money out of an IRA, you pay tax on everything. If you take it out with a non-accept, either under 59.5, not accepted, you owe taxes plus a penalty. If you take it out over 59.5, just the ordinary income. If you take it out under 59.5, but you have an exception, whether it's disability, education, new home, shit like that, then you will pay taxes, but not the penalty. So I'm going to go with B. Good. The 5% markup policy applies when a member firm underwrites, no. Underwrites, no. Mutual funds, no. It's only with secondary market trade. So underwriting, no. Underwriting, no. And the mutual fund is a sales charge, so that doesn't apply. So boom. And here's another trick. If there's a prospectus involved, there's no 5% markup. So let's go with that. Good. I know I'm going to screw up. I'm warning you because I'm hoping I won't, but I know I will. The primary purpose of an SRO, self-regulatory organization, is to press criminal charges for violations. No, they can't do that. Only the Department of Justice can do that. Establish market prices for securities. That would not be okay. Ensure the solvency of broker-dealers. No, they're not making sure they go out of business. They're just making sure that they're financially responsible. Promote fair and equitable practices. That's the answer. To try to make sure everyone treats it the same and everything's fair to the customers. That has to be the answer. A corporation has a 9% cumulative preferred issue outstanding. The company paid 7 2 years ago, so we owe 2, and 8 last year, so we owe 1. So that's a total of 3. If the company wants to pay a common, dividend in the current year, the cumulative preferred stockholder must first receive a dividend of, so you have to pay this year's, which is 9, plus 2 for the year, 2 years ago, and 1 for this year. So that's 9 plus 2 plus 1. So that would be 12. You have to pay all the past ones plus this year's. When a brokerage firm executes transactions for customers in a municipal securities, all material information should be disclosed. This is the one that I'm going to screw up. On the business day after the trade, I think that's no good. At or prior, I like that one. On the business day prior, that could be it. At the end of the day when the trade was executed. Okay, that's fair, but I don't like it. I'm going to say disclosed stuff is always at or prior to the time of the trade. Yes! Boom, 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 boom. Okay, guys, if you like what I'm doing, please hit like, subscribe, share, and hit that little bell button so that when I do my lives, you can join in and ask questions every Tuesday and Thursday night, 8:30 p.m. Let's keep going. Of the following broad-based indexes. Also, if you like this stuff, if you like this thing of this, I have a link. Buy the book, buy the program. It's pretty awesome. If you just say the SIE, you can do Achievable also. I love them. Okay, but the SEC will cover all the exams. Of the following broad-based indexes, the one with the largest measure of the market is. Everyone gets this question. The New York Stock Exchange Composite? No. Standard & Poor's has 500. Wilshire has 5,000, which is really 6,300 now. And the DJIA is only 30. So we're going to go with Wilshire. Wilshire is the wide. They may use the word widest or broadest. Love it. If a newly hired person that is employed by a broker-dealer and will be offering corporate securities, she becomes FINRA registered by passing the SIE, no, that just gets you ready. Passing the SIE and the 7, I like that. Passing the 6, no, that only allows you to do mutual funds and annuities. Passing the SIE and the 6, again, mutual funds and annuities. So we're going to say that you need L7. I like it. Information barriers, also known, they use the word Chinese walls, are required between which of the following departments of a broker-dealer? Operations and trading? No. Retail and operations? No. Retail, sales, and institutional? No. I could be wrong on this. Research and trading and always investment banking are stuck. They can't talk to each other. Oh, that was a delay. I thought I was going to get that wrong. So information barriers are preventing information from crossing over. It's a barrier. So they don't want research talking to trading, and they don't want trading talking to underwriting, and they don't want investment banking, and they don't want investment banking talking to research, because there's a problem there with inside information crossing over. So they want to make sure that that doesn't happen, or as best they can. In a Chapter 11 bankruptcy proceeding, which of the following has the highest priority claim? They always do this, and I'm going to get this wrong, but it's secured, unsecured debt, secured, unsecured, general. Then we have preferred and common. So I'm going to go with secured, but watch, it's going to be administrative. Oh, I got it right. I'm surprised. Good. Secured is always first. MSRB rules do not apply to. So who issues muni bonds? States do. Do states have to follow law, federal law? No. Think about it. Think about two things. One, you now can smoke weed in 15 states, even though it's a federal crime. Here's the other question I argue with everyone. Why do they not do a national mask mandate during the pandemic? Because they're not allowed to. They can just do federal properties. Each state is like a little mini country. So states do not have to follow federal law. I don't want to get in a discussion about that. I'm just saying, good or bad, they can't do it. So MSRB rules, since it's federal, do not apply to issuers of muni bonds, because that's the states. So that's the answer. But they do apply to registered reps, broker-dealers, underwriters, anyone that sells or trades munis has to follow MSRB rules. But the issuers don't, because they're the states, they're exempt. Do we cheat them, and how? DCH, an investment banker, has entered in a firm commitment underwriting, okay, with ABC Company to sell 10 million shares of stock. What are the requirements of this arrangement for the investment banker? Sell all the shares or cancel the offering? No, that would be a best effort. That would be an all or none. Sell the entire issue or retain any shares left unsold. We will come back to that. Sell at least a minimum percentage as stipulated by ABC. That would be a mini max. And sell as much as possible and return anything left unsold to ABC. That's a straight up best efforts. So I'm going to go with sell them all. And whatever you don't buy, we got it. Whatever you don't sell, the underwriter has to buy and take the loss or the hit. As it relates to private securities transactions, PSTs that are executed by an association, Let's slow down. As it relates to private securities transactions that are executed by an associated person of a broker-dealer, compensation does not include being paid a commission by another broker-dealer. That does. Receiving tax benefits received by the employee. Being paid a commission by the employee broker-dealer. Being given warrants. I'm going to say tax benefits because it's not really a thing. So everything else would be paid. I'm going to get this wrong. See, I knew it. Okay. So the point is, I knew that. So if you're getting, I knew I had to get one wrong. So anything that you go, so the whole point here is that a private securities transaction is something by an associated person at a broker-dealer doing outside their broker-dealer. So being paid by your own broker-dealer does not count toward this. So that's the point here, that if you do a PST, a private securities transaction, you're doing it on the books and records of another broker-dealer. So anything paid by the broker-dealer, your own broker-dealer, would not count toward the stuff they have to watch over. There you go. Which of the following bond has the most interest at risk? Remember, long and low. Just find the longest term bond, boom. And say they gave coupons also. Say they had two 20-year bonds. Then you find the one with the lowest coupon. So I'm going to go with this. Bond maturing in 20 years. Love it. The arbitration panel. See how I just blow off the one I get wrong because I'm not worried about it. You can't worry about that shit. You give it up. Even though I'm still talking about it. What am I doing? Why am I still talking about it? Move on, Ken. The arbitration panel for disputes that involves public customers will consist of, okay. If it's two broker dealers fighting with each other, it will be it'll be all industry arbitrators. But once a human being is involved, it has to be public and private. So here's the thing. I could get this wrong again because technically it's B. The customer can request all public arbitrators. So if I get this wrong, it's because they're missing it up. It will be at both public and financial industry, but if it's the public, they can request all public arbitrators. Let's see if I get this wrong. Okay. And down here it should say they can request it, but they don't have to. A person who invests in a variable annuity would be most concerned with the performance of the insurance companies. See, this is a variable annuity. So we care about the separate account. That's what we care about. Remember, fixed annuity is general account, variable annuity is separate account. Those are just trigger words. An investor wants to sell a specific amount of a base currency and exchange it for a counter currency. The main factor in determining the amount of the counter currency the investor is able to buy is, okay, the credit rating. No, there's no such thing as a credit rating on a currency. The rate of inflation doesn't matter. The trade deficit, no. The spot exchange rate. The spot exchange rate is what the currencies are trading for compared to the other currencies. So that's what you're going to use. Good. 25 left. You can make it, guys. A registered rep wants to borrow funds. A registered rep. Let me get this out of the way. There we go. Okay. Try to do this in an hour or so. A registered person wants to borrow funds from a neighbor who is also a customer of his firm. Which of the following statements is true? He is not required. No, he has to notify. He is required to notify and receive approval from his firm. He is only required to notify his firm. He is required to notify FINRA. Okay, D is no. I'm going to say, since it's a neighbor, I'm going to, again, see how I doubt myself. And this is the way you guys can feel. It's totally okay to doubt yourself. Just pick your answers and move on. Does he have to notify? We know it's either B or C. And do I need approval or not? I'm going to say, since it's outside, I'm going to say you don't have to notify. I don't think you need approval. We're going to find out. Oh, we need approval from the firm. Okay. So the point is, I confuse this sometimes. So what happens is, if I have a customer who is my family member or a lending institution, I don't even have to tell them. If it's a person outside, if it's a person I have a relationship with, then I have to notify and get them to approve it. There you go. Look at that. 2 wrong. I suck. A customer gives his registered rep the following instructions. Buy 100 shares of GM whenever you think the price is right. Under current regulations, the order is, it's not discretionary, it's not held. May be accepted and executed any time that day. May not be accepted, must be executed immediately. No, it's a not held order. You're giving them limited, not really discretion. You're giving the ability to make choices, to choose time and price. So that's all good. An investor with an investment objective of speculation wants to purchase a security that will increase by the same percentage as a decline in the S&P 500. So I want to buy a security that will move with will increase as the same percentage as a decline in the S&P 500. So it wants it to go opposite. Which of the following securities should be recommended? A leverage ETF, no, because that will move more. An exchange traded fund, that will move the same. A leverage inverse, no, because remember, so leverage means it's going to move more. So leverage means if something moves 10, we're going to move 20 or 30%. So we don't want that. We want it to be the same percentage. So it's either an ETF or an inverse. Inverse means if the market goes up, it goes down. Market goes down, it goes up. So I'm going to go with inverse exchange traded fund. Stabilization. That's when you bring a stock public or you do an issue, a new issue or an additional offering or a secondary, the lead underwriter is allowed to buy stock to stabilize the price to keep it from dropping. It's allowed. Is it collusive and prohibited? No, we're allowed to do it. Is used to prevent the price of a newly issued stock from falling? Yes. Is it used to ensure the price of a newly issued stock rises above? No, because you can't prove it. And it guarantees that the price of a newly issued stock is stable? No, because you can't guarantee shit. Has to be B. It's to prevent it from falling for a certain amount of time until it kind of people catch wind of it. Kind of thing. Very good. Which of the following statements is not true? So we're looking for an incorrect statement concerning a clearing corporation. It offers the customers the ability to have real-time trade matching. It is responsible for automated book entry changes in the ownership of securities. It provides trade comparison and reporting services. It assists broker-dealers in transferring assets in a customer account to another broker-dealer. I think I'm going to go with B. Again, this is going to be my third one wrong because you can have real-time trade matching. It does comparison. And the word transfer, I'm not a fan of, but it could be an ACAT. Let's find out if I'm wrong. Boom. Okay. The transfer agent does the book entry changes of ownership. Little sweaty there. During an inflationary period when interest rates are rising, the market value of existing bonds would. So during an inflationary period when interest rates are rising, rates are going up, bonds are going to go down. So we think the value of existing bonds will drop because they're inverted. Good. A registered person wants to set up an investment program for a charity and will not be receiving compensation for his services. Which of the following statements is true? He must receive the written approval from his broker-dealer. He's required to provide notice. He's required to provide verbal notice, and he's required to provide notice. Okay, so okay, a registered rep wants to set up an investment program for charity and will not be receiving compensation for his services. So this is where it's iffy because usually if it's charity, you don't even have to fucking tell them. But since it's investment program, I'm going to go with, and again, this could be my third or fourth one wrong. I know, but you don't tell FINRA shit. I don't think you need approval. I think you're going to have to give written notice. A watch is going to be verbal, but I'm telling you, since it's with investment program, you might even need approval. Let's see what happens. Boom. So since it's charitable, you just got to let them know. They don't need approval since it's charity, but the problem is you're setting up an investment program for them. So it's securities related. If you're just working charity, you don't even have to freaking let them know. A fee-based account is most suitable for customers who have, let's see. So fee-based account is what broker-dealers can do where you pay a set fee every month to cover all your trading, not the advice, just the trading. So A doesn't work. Discretionary, not really. Buy and hold, no, because you're not trading that much. It's mostly for someone who's going to trade a lot, because if you know you're going to trade a lot, I'd rather just pay one fee every month and have her cover all my trading. It's not the same as a wrap account. A wrap account is what investment advisors do, where it covers all their advice and everything involved. Only investment advisors can do wrap accounts. Broker dealers can do fee-based account because you're just paying for the trading, like a retainer almost. A type of offering in which whatever is not sold is retained by the issuing corporation. A type of offering in whichever is not sold is retained by the issuer. That means it goes back to the issuer, would be a best efforts. Remember, so we're trying to, I'm the underwriter, you're the issuer. I try to sell you 1 million shares. I only sell 600,000. You get the 400,000 back if I don't sell them. When can a broker-dealers make unsolicited telephone calls? This one's easy, I think. Between 8 and 9 p.m. in the customer's time zone. Good. A breakpoint sale is a violation is best defined as sale in investment company shares in anticipation of a distribution. Nah. Sale of an investment company shares in dollar amounts just above the point with the sales charge reduced. No, because that's what you want. You get a breakpoint. Sales of investment company shares in dollar amounts just below the breakpoint. That could be a problem. Payment of compensation to a registered rep who has ceased to be employed by a member firm. Now they can do that. That's, yeah, as long as they have an arrangement. So we're going to go with sales of company shares just below the point, below the breakpoint, because that would be a breakpoint sale because that's making the customer pay more money. Good. 14 left. You're almost there. Maybe 15. I can't count. An individual purchased 100 shares of stock at 35 per share. The stock is now trading at 44 per share, and the issuer decides to split the stock 2-for-1. After the split, the customer's cost basis will be. So we now have 200 shares. Now here's where they try to trick you. You're going to go, oh, half of 44. No, that's the new price. It's not your cost basis. You bought them at 35. So you're going to cut that in half. You're now going to have 200 shares with the cost basis of 35 divided by 2, 1750. That's got to be the answer. Good. It's not 44 to 22 because that's where it's trading, not where you bought it. All the following are considered a good delivery in the sale of 500 shares of common stock, except. So good delivery is in like lots of 100, stuff like that. So 500 share certificates, I'm okay. 1050, yeah, because you can combine the 50s to make 100. 450s and 1030s, we'll come back to that. One 500 share certificate, that is okay. It's going to be C, but let's talk about it for a second. So it may not even add up, but the point is, there's no way to put 30s together to make 100. Like you have all the 450s, that's your 200 shares, right? But then the last 300 are in 30 shares. There's no way to put 30s together to equal 100. So that would be not good delivery. A husband and wife have a joint account with rights of survivorship. Yay. If one of the parties places an order, the RR takes the order, but must have the order approved by the principal? No. Should contact the other party? No. May accept the order only if the other party is granted trading authorization? No. May accept the order. If you have a joint account, both people can place orders. Get over it, guys. Good. Which investment company does not charge a management fee? Closed-end managed. ETF, oof. Open-end, yes. Let's go with the UIT because it's really not managed. They're not managed. ETFs are managed. They have very small fees. If I'm wrong, I'd be very surprised. Good. Which of the following entities typically sponsor a 529 plan? The state. It's run by a state, okay? The states run the 529s. The Fed runs the covered L's. That's why 529s. If I'm lying, I'm dying. If I'm wrong, I'll be wrong. But it's run by the state and it's subject to MSRB rules. Very good. Broker dealers must provide privacy notice to every customer. Okay. Definitely when the account opens. Let's try that. Let's see what happens. Yeah. Privacy notices tell them we're going to keep your shit private. You got to do it then. Okay. Okay. And you have to send it every year. I thought so. I wanted to make sure. And you have to send it to them every year. So if there's an annual in this, I would have had a problem. When you open the account, you send the privacy notice, how we're keeping your shit private. And then every year you have to send them the updated notice. An investment company that is purchased in installments and that matures at a fixed dollar amount is called you would never know this, but it'd be a face amount certificates. A purchase in installments that matures at a fixed dollar amount would be a face amount certificates. Probably you'll never get a question on that. But so remember, what's investment companies? FUM, F-U-M, face amount certificates, unit investment trust, management companies. Okay. What's an investment advisor? An investment advisor is a firm that gives advice as compensation as a business. So a person who manages and keeps track of issuing company shareholders, though that would be more the registrar. A person who holds funds or securities, it's a bank or a broker dealer. A person who buys and sells securities, that's a broker dealer. A person in the business of giving investment advice for a fee, not for free, for a fee. Good. Hey. Not yet. So, which of the following statements is true regarding, throwing a thing with my dog now. Which of the following statements is true regarding a registered rep who has not completed the continuing education regulatory element within 120 days of his registration? The broker-dealer's extension, that is not a thing. Representative, we place in inactive. We'll come back to that. The representative would be suspended. I don't like that because, we'll come back to that. A representative had 30 days to complete. No, we had his 120. So it's either B or C. It's called CE inactive. So we're going to go with B. If it's wrong, they're wrong. Good. So again, there's firm element and regulatory. Regulatory you have to do on your second anniversary and every 3 years after that. If you don't finish it within 120 days of your anniversary of date, then you're inactive until you finish it. There's firm element, which is done every year, provided by the firm. Those are the little modules that you do where they give you the scenario, and you got to pick the right thing. A FINRA member firm is not required to be notified if a registered rep engages in which of the following activities: selling commercial real estate, entering competitive cycling, starting a business, acting as a marketing consultant. So all those are business except for competitive cycling events. Boom, it's activity. A client has received an unsolicited email recommending a penny stock. The client then calls his registered rep to research the company. The RR cannot find any financial information on the stock. It may indicate that the email is part of an pump and dump. The email is part of an attempt to peg the price. The email is part of a trading head scheme. The email is part of an unauthorized release of inside information. I would say it's going to be a pump and dump because you're trying to push the price up. Just throwing it out there. Okay. Pump and dump is like people, they kind of say GameStop might have been that, where they're creating information just to drive the stock up on nothing. Okay. Okay. Guys, again, if you like this, I know you're suffering through this. It's been an hour already, over an hour. If you like this, please, if you like this style of questioning, please go in the link and go in there, hit the link, buy a book, buy the videos, whatever you want. It's really good stuff. If you don't want to spend that kind of money, we also have the Achievable down in there below it, which is like $70. Amazing. Both are amazing for the SIE. And I actually did a test on the SIE on Achievable. I'll put it in all this in a big playlist. The credit rating of a municipality will most likely improve with increase in tolls. No, we all be mad. Increase in property taxes, decrease in residents, decrease in fees being charged for licenses. No, I think the increase in property taxes means that the price of shit is going up. I love it. Means the value is going up. A registered person of a broker-dealer is considering supplementing his income by working part-time at a local convenience store. To do this, the individual must receive written permission, must provide written notification, can simply start the job. No, I'm going to say has to notify the employee. Boom. A bond has a 6% coupon, is trading at 6.78 basis. The bond is trading at which of the following price levels. Okay, so the coupon is here. Any yield. So remember, on a discount, the coupon is the lowest. And on a premium, the coupon is the highest. So the coupon is lower than the yield. Basis in this case means yield to maturity. So coupon is lower than the yield. That means it has to be a discount. Boom. And if the coupon was higher than the basis, then it'd be a premium. What is a market outlook for buyers of calls? So buyers of calls are bullish. Buyers of put are bearish. Sellers of calls are bearish. Sellers of put are bullish. Buyers have rights, sellers have obligations. Buyers buy for speculation, either up or down, and sellers do it for income. So I just lost track of what I'm doing. Am I bullish, bearish, volatility? I'm going to say bullish. Okay. That is it. Review 98. I got 2 wrong. I'm very upset about that. 2 close there. We've gone over them. See how it looks. They give you the authority. You can go through the ones. You can hit all missed. You can do the correct, whatever. You can look at them all, and you hit a button and go right to the question. Pretty awesome. Well, just make it painful. Look at the one I got wrong again. Guys, thank you for listening in. I hope it helps. If you like what I'm doing, please hit like, subscribe, share, comment on here if you want me to do something else. If you think I'm rude, if I think it's wrong, whatever you want to do, please put in comments what you think of this. Guys, you got this. We're going to do it. Get this test done so we can move on, get the 6 and the 7 out of the way, and then we can move on. Love you guys. Wash your hands. Have a good day.